Hello, this is Brian Rezny, president of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. We're firmly into 2022. The markets had a little bit of volatility, and I will use the word normal volatility. The last couple years before this year, we really had subdued volatility. We really had no major pullbacks of 10 to 12%. And as I've kind of reiterated and discussed over many videos over the years, volatility is normal. Nobody likes it, but it has to be accepted. Otherwise, you really have no chance to make a return on your money. Now, where does volatility come from? It's not just in the stock market, folks. It's also in the bond market. Bonds are considered safe investments by a lot of investors. Treasuries, the safest investment in the world. They can still go down in value. In fact, if you look at the long-dated Treasury, 20-year Treasuries, they're actually down more or about equal to what the equity market in the U.S. is year to date. So how is it that the bond market could be down 7-8%? I thought they're safe. They can go down also. So just remember that. Volatility is normal. Statistically speaking, we have a 10 to 12% pullback in most asset categories every single year, sometimes twice. That means bonds, equity stocks, real estate, oil, gold, all assets have these bouts of volatility throughout the year. Doesn't mean you physically lost money. It means that, you know what, your $1 million reset down 10% before it has a chance really to go higher. Volatility is normal. 3 to 5% corrections happen dozens of times throughout the year. And again, it's normal. This could be a year of extended volatility, and we may not go anywhere in the overall investment markets until maybe the second half of the year. Expect it. These things happen. Every month, things don't go up. Every month, things don't go down, and returns are never spread over a 12-month time frame. They can be consolidated in 30 or 60 days most often in a lot of asset categories. The economy overall is doing well. There's a few parts, obviously, that we're concerned about, and we're looking at these things every single day, but they're not concerned enough where we would be raising cash or making substantial changes to our risk profile within our client portfolios or models. But there are a few concerns. Inflation is a little sticky in some parts, but we're starting to see with the data from last week, especially car inflation, which is a major driver of the overall component because it's been up so high, is actually starting, it seems to be cresting and coming down a little bit. So that's a net positive. But inflation, I think, is going to be pretty sticky, at least until the second half of this year. The first half is going to be higher inflation. I think we'll start to, as we get into closer to the second half of the year, we'll start to hopefully step down. We're watching this month in, month out. And again, if things are changing, we'll make adjustments as necessary. But one of the things we're not going to do is we're not going to panic or make emotional decisions, because that is a detriment to long-term investing. And remember, every investor is a long-term investor, meaning if you're 80 years old, you're a long-term investor. Long-term to me is 3 years or longer. Meaning, if you're 80 years old, you're not going to spend all of your money in 3 years. You're going to spend income or some principal from your money over that time frame. But the majority of your money is intact at the age of 83, then, as an example. So all investors, the majority of your money is long-term money with income needs or current needs today within that 3-year time frame. As long as you've got assets that can cover that income stream, again, we're not forced to sell things that maybe we don't want to sell right now in order to generate income. So it's all part of that retirement planning strategy that Rezny Wealth Management believes in. As we go further and further into this year, and of course, there's always going to be something. You know, right now it's Russia and Ukraine. Is Russia going to invade Ukraine? They could, or they could not. Not really an overall concern, because in the short term, there's a lot of hoopla, a lot of negativity, and really is it posturing by Russia? That could be all that they really want, is to get some deals or concessions back from the U.S. or other parts of the world. But could they really invade Ukraine? You know what, if they do, it'll probably be a short-lived war. I hope they don't do it. There's going to be added volatility, but then they might pull all their troops away in the next month, and then the market's kind of recoup and go back up to those newer, higher ground opportunities. So again, there's always going to be something. There's always been something. The big key is the economy ultimately going to grow over the next 2 to 3 years? We firmly believe it. I think inflation will come down as we get into the second half of this year to a more manageable level for people. I think generally speaking, corporations are going to do quite well across the board with earnings. And if we do see significant slowdowns or things that do make us more concerned, we will, of course, adjust risk within client portfolios on an automatic basis. As a client of our firm, if you have any questions, please call me at the office or send me an email. And as always, we appreciate your business and your trust. If you have any friends or family members that need a quality financial firm to manage their money, please refer us to them. We always, again, grow our business through quality clients and quality referrals. Make sure you have yourself a safe and profitable day.